Boom, boom, and boom. What is going on, everybody? Welcome to the fourth episode of Market Mondays, where we talk about everything from A to Z, including the price of Bitcoin, the price of Ethereum, and everything that's going on in this crypto industry, in this crypto space. So today we have a lot of important information to talk about. Some of the stuff including Ethereum 2.0's long anticipated update, the news with some scams that have been going on around the place, NFTs, and a ton more. So if you guys like what you've been seeing so far, please be sure to hit the button below, like this video, subscribe to the channel, turn on all notifications just to make sure you guys are getting this information. It is time sensitive, but without further ado, let's go ahead and jump right in. Pulling up today's charts, we can see Bitcoin over the course of a 24-hour period, 0.5% down, Ethereum 4.8% down, Tether $1 as always, XRP negative 2.5, Bitcoin Cash 5.4% down. Going a little bit further down, we can see Chainlink down 5.7%. Again, this is coming after a huge pump that we did see over the week, so we will be reviewing this shortly. This is just what the market is today after the 24-hour period. Looking at some of the top gainers over the past 24 hours, Kusama up 25.4%, nice and juicy. Polkadot going back up 7.1%. Binance Coin BNB going up 2.0%. Not a whole lot of winners just aside from those right there. Looking at some of the top losers, we can see Ampleforth negative 18.4%, Loopring negative 11.8%, Balancer negative 9.7%, NEM negative 9.6%, Aves New Coin negative 9.3%, Uniswap down negative 8.4% after a nice juicy pump. Moving it over to the Bitcoin chart over the past 30 days, we can see Bitcoin had this nice pump from looks like 10,700 upwards of 13,100. So it's nice to see it go back down, kind of stabilize out, give you guys some time to buy, give me some time to buy. Moving it into some negative news that we all need to be aware about, just because this is Bitcoin. People are smart in this industry. People are always doing the most. We can see Ledger posted a tweet October 19th. According to our information, some scammers are getting in touch with Ledger users through text messages and emails. So never give your 24 password recovery phrase. Ledger will never ask you for that. If you guys own a Ledger, please be sure not to respond to any of those support emails. They are just scammers trying to hack your funds. Going a little deeper into it, we can see that the Bitcoin wallet provider Ledger compromised again by its malicious phishing attack. Scrolling down, some of the key takeaways from here is that some Ledger hardware wallet users received phishing emails with software that led to a loss of funds. The hack may have resulted from the company's user data breach in 2020. So just be on the lookout for scams, guys. If you ever see these market scams, these ads on YouTube saying that they're going to give away Ethereum, saying that if you send them 1, they'll send you 10, that's a scam. There's no way in this humanly great universe that that's going to happen. As bad as I wish it would happen, that's just not the way the cookie crumbles these days. Moving into some bullish news, we see that PayPal just gave 346 million people a new way to buy Bitcoin, but there's a nasty catch. And so going a little bit further down, we can see that the Bitcoin and cryptocurrency community has been set alight by new payment giant PayPal. Will allow its users to buy and spend Bitcoin and a handful of other major cryptocurrencies. However, celebrations were somewhat stifled by the small print that revealed PayPal wouldn't release to its users their cryptocurrency into or out of PayPal, nor would users have control of private keys, a long string of numbers and letters that allow holders to move their digital assets. Currently, you can only hold cryptocurrencies you buy on PayPal in your account, the company wrote in materials outlining its Bitcoin and crypto plans. Additionally, the crypto in your account cannot be transferred to other accounts on or off PayPal, meaning you're not going to own your keys, you're not going to own the actual digital asset, you are just seeing it in a portfolio manner. PayPal didn't respond to an inquiry asking about whether Bitcoin or cryptocurrency withdrawals would be allowed in the future. The news has divided the Bitcoin and cryptocurrency community. Satoshi Labs, who is the creator of the hardware wallet Trezor, warning people to avoid PayPal altogether, invoking that the cryptographic mantra, not your keys, not your coins. Do not use PayPal for Bitcoin. There are many other places to buy crypto which will let you keep ownership of your coins. If you go back into my channel, you can see we talked about Coinbase, we talked about CoinGecko. I would recommend you guys check those out just to see where you can buy them. Moving into some other cryptocurrency news, Novogratz says Bitcoin is digital gold, not a currency for now. Billionaire investor Mike Novogratz is doubling down on a call for Bitcoin as it serves for digital gold. I don't think Bitcoin is going to be used as transactional currency anytime in the next 5 years. Novogratz founder, chief executive officer of Galaxy Investment Partners, said in an interview with Bloomberg TV Bitcoin is used as a store of value. Crypto fans have seized on that argument while raising concerns about central bank money printing during the pandemic and potential inflation to shoot higher. They point out that the global central banks are looking into creating their own digital assets, while China is already testing on the digital yuan. And so Bitcoin as gold, as digital gold, is just going to keep going higher, said Novogratz. Let me know what you guys think about this. Let me know what your thoughts are on Mike Novogratz doubling down on Bitcoin as it may serve for digital gold. Some other news coming out on Forbes: buying Bitcoin is like investing Google early or Steve Jobs in Apple, predicts Wall Street legend and billionaire Paul Tudor Jones. Bitcoin has come a long way in the 10 years since it was created, but for some reason, or for some, it still feels early. The Bitcoin price climbing year-to-date highs this week, which we saw earlier. Paul Tudor Jones, who made headlines when he revealed he was buying Bitcoin to hedge against inflation earlier this year, has said buying Bitcoin is like investing with Steve Jobs and Google early on. Let me know what you guys think about this. What do you view Bitcoin as? Do you see that we will go in the next 5 years and make it a transactional currency, or is this more of a store of value for central banks, for big companies, or for you early on? Last week we talked about NFTs, non-fungible tokens, in the sense that you only own one of those assets, so I thought it'd be nice to show you this article and dive a little bit deeper down. Why are NFTs so exciting? Well, it's worth noting that non-fungible tokens, meaning they can't be recreated digital assets, have existed for years. What makes NFTs, non-fungible tokens, so valuable? Some of the things that are important to note: ownership. Your Twitter handle can be taken away from you in a heartbeat. NFTs cannot. Blockchain technology will help enshrine your ownership rights and make digital assets a heck of a lot easier to move around. They're transferable, so if you buy one of these coins, you can actually hold it in your wallet, you can store it, it's safe, you own the address, just like when you buy a piece of art, you would own that unique piece of paper. So we'll see where this market goes in the next year to 5 years. But another good thing is authenticity. The fraud is a big problem in the world, as many of us have known, and so affecting everything from art to tickets and collectibles. Well, blockchains powering NFTs can clamp down on counterfeiting, giving buyers the confidence that they need when they pay for it. Some of the NFT use cases, we can see that art is one of them, collectibles is another, gaming industry, virtual assets, real world assets, identity. So why are they important? Because in the world of art, digital artists can have a nightmare protecting their copyright, and it can be difficult for talented creators to make a living. Through NFTs or non-fungible tokens, some can buy a creation and proudly showcase it in a virtual space, with blockchain offering proof of ownership. Artists can get a bigger cut of the payment and even a portion of residual profit from future sales to create a reoccurring revenue stream. Collectibles such as Fortnite skins, collectibles such as baseball cards, collectibles such as NFL football cards, rookie cards, a lot of us find value in those. While with NFTs, we can do the same thing in a virtual world. Gaming industry, selling rare weapons and skins is currently prohibited by many popular titles such as Fortnite. It can also be near impossible to use these assets in other games. While with NFTs, in an ideal world, converted items can be easily transferable, solving one of the problems and annoyances that have been avid for gamers over the past couple of years. From this article off of Decrypt, they are explaining to us what Ethereum 2.0 is. The Ethereum 2.0 upgrade aims to address the network scalability and security, and the first phase of the upgrade, due in 2020, will see Ethereum switch to a proof of stake consensus mechanism. They go ahead and let us know the difference between the two. So Ethereum 2.0 is the upgrade that aims to enhance the speed, efficiency, scalability of the Ethereum network so that it can process more transactions and ease the bottleneck issue. So the bottleneck issue is essentially you have too many people that are trying to put in requests to transfer over these tokens, and so what are we seeing? We're seeing a crowding space, a bottleneck function where too many transactions are trying to go through and we have to wait long periods of time, we have to pay high gas fees. So this Ethereum 2.0 is aimed to set at that and solve that issue. And so proof of stake differs in that instead of miners, transaction validators actually stake crypto for the right to verify transactions. So in order to stake your Ethereum on the Ethereum 2.0 version, you would need to own at least 32 Ethereum, locking it into the network to be considered a true validator. And so that is about all I have for you guys today. We talked a little bit about Bitcoin, its price going up over the past couple 30 days, where it stands today, some scams to be careful of, big hedge fund managers mentioning where they see Bitcoin in the future, NFTs, non-fungible tokens, and that new marketplace, where that's going to take us. And so if you guys like what you've been seeing on this, please be sure to like this video, show support on this channel. And until next time, we will talk to you soon. Bye, 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 bye.